Hello and welcome back. Another week is in the books, and here's our weekly review. As you see from these snapshots at close, had a pretty good week, a lot of positive going on. Had one red day, and it wasn't even that big of a red day compared to the rest of the week, so great week overall. Looking at the progress report, uh, closed on Friday at 197, almost 198,000, which is awesome. Uh, if you look back to the first day of January, like, and you look at the return I have now, it's insane. Like, it's been a really good year for selling options for me. Uh, Realized premium for June is up to $12,680. We still have a couple days left in June, but I highly doubt I'll be closing anything in the next 3 days unless something drastic happens. So that might be a pretty close to finalized number for June. Month to date has been insane. Cumulative return is 9.53%. And where other people will be celebrating, like, nice 10% return, I see this as like a warning sign. Something is not going the way it should if I'm making those kind of returns on the strategies I'm trying to use. So think of this, like, from 1926 to 2018, the S&P 500 returned 10 to 11% a year. Why am I getting that in 1 month, just about? Either I'm playing on more volatile stocks than I mean to, or I'm over leveraging, which could be a huge concern. So I'm going back through and reevaluate my portfolio, trying to figure out how I got these returns and what is causing me to get these high returns. Like, they're higher than I expect. They're actually kind of frightening to me. I mean, I'll take it as 10%, like that, or 9.5%. Like, that's awesome. But it's also like an alarm bell ringing over here. Like, why am I getting these returns? Like, the strategy I'm trying here is you should be able to get like a 1 to 2% return a month pretty safely. Use a little bit of margin. You can double it, maybe 2 to 4, maybe 5%, 10%. I'm doing something more risky than I intend to, so I had to figure out what that is. So going forward, you might see me playing some safer probability of monies or less contracts. This week's trades, I bought a Tesla bear put spread, and I'll move into that a little bit later in this video. But this position was only open for like 5 minutes, and it made $100 or $98, so I ended up closing it. I sold some puts on JD. This is pointed out to me by Cloud Ninja, and I think I actually closed this a day later. Yeah, here it is for a nice little gain. So thank you, Cloud Ninja. I sold 5 more puts on Palantir to reestablish that 10 contract position for the wheel. And then Palantir shot up to like 26.50. I thought that might be like at a peak, so decided to close it down, take a small gain, and I'll wait until Palantir comes back down to set up these puts again. So I took a little gain. There's 10 contracts here because I sold 5 last week. Selling this 5 gave me 10 of that position. On Tuesday, I also opened up some PMCCs on Baba. It was trading some strong supports near some all-time lows, and the Leap contracts were pretty cheap to get into, so I decided to open those up. And then later that day is when I started thinking, like, wait, these returns this month have been crazy. What am I doing? Am I over leveraging? And then I was like, wait, I just put 10% into a Chinese stock, and so I decided the following day that I was going to close down one of those contracts to reduce the risk to that position. So Wednesday we come here and you can see me close down one of those contracts. I was going to close down one position, even if it was at a small loss, to get out of it and reduce that risk. It just so happened Baba decided to go up, and I made some money off of that. But I would have closed it even if it was a small loss. Already went over the JD put that I closed. And that's all I did on Wednesday. Thursday, the VIX dropped, and a lot of premium got sucked out of the contracts I had on. So I decided I'll close it all down. I had concerns I was over leveraged. Let's take off a bunch of positions and reevaluate, reassess. So I closed on a bunch of stuff. This Clorox was a part of a PMCC, so taking that off, opened up the Leap, and Clorox actually ran up a little bit on Friday. So talking about timing the market. Same thing with KMB. they're part of a PMCC, and KMB went up. So again, timing the market perfectly, I guess. Yeah, closed a bunch of these positions. TQQQ, did I say that right? TQQQ. I closed those down. They're at a decent percent profit, and they had till September. Just seemed like a good time to take it off. I bought into some more PMCCs on AT&T. Had a pretty good fill here. At the time when I got this, AT&T was trading at $28.90. If you add the 23 to the 580, the intrinsic value of that is $28.80, which is 10 cents less than what the stock was trading at. So I think this was a really good bargain price to get into that leap. And then I sold some 29 calls against it because my break even was $28.80. And so I'll make a little profit if it's AT&T stays up by above 29. If it goes below 29, then I reduce the cost basis of these 10 leaps significantly. And then also on Thursday, I saw Baba ran up. I could close the remaining poor man's cover call for a $500 gain and decided why not. 2-day hold and made what, $700 between those two positions. That's pretty awesome. I also had some T calls expire on Friday where I got $192. Those are again part of another PMCC. My realized option income is $19.21 for this week. And I also got paid a dividend from Nusi of $81.90. Going back to the Tesla bear spreads, this is a different position you haven't really seen me do. I don't normally buy premium. I tend to lose more often than not when I do it. But on Tesla, I was pretty sure, Tesla, it's going to go down this week. It has to. We know how that turned out in hindsight. But anyway, I used the combo order, and that's when you put in both orders at the same time, so you can get like a fill immediately, and you don't have to worry about like the stock moving and messing with your price points. And if you break this down, you can see it took 4 fills to get in. They all had varying prices that I got into those. But the average was I paid $2.23 to get into each contract. And when you're buying a put spread like this, your max loss is the debit you pay to enter the trade. And in this case, that's $892. All right, so here's the P&L graph for it. So down here is the stock price. Over here is your profit. We're looking at the blue line. And you can see like if it's if Tesla was below 618.31, I'd be in the profit. If it gets under 615, which is where I sold that put at, that's when I hit max profit at expiration, which would be $1,108. Max loss is defined by the 892, which is why some people really love these trades. I think it's risky. I like selling premium. I'm not sure what was going in my head this morning when I put this trade on, but what can I say? Sometimes you can be utterly wrong and make money. So my play on this was Tesla was going to be like at 580 sometime during this week. I could close that trade down. I bought that position basically at the top of this candle here, and I closed it before it even got to the bottom of this candle. So I happened to catch the dip to get out of the position. Had I not closed it during that time, Tesla basically traded above 620 the rest of the week, so I would have had max loss. And I only got this fill in because when I was putting in my profit taker, I was trying to calculate 30%, and I saw like there was a drop in Tesla, and I decided, this might be my win, and ended up closing it out. I thought I was closing it for 20%, but only got like 10% of the profit back. But I mean, you can't complain. I mean, I botched this trade in like more ways than one and still came out with a profit. Current positions, you can say I don't really have too much on. I got a cat put, some PMCCs that are still running. Unless KMB, Clorox, and Rocket go up, should be a pretty flat week for me next week. I think my theta for my portfolio is only $152 or so. So if you multiply that out, was that like $750 for the week if all positions stayed flat? So it shouldn't be too big of a week next week unless I find something crazy going on. And to wrap up, I want to talk about like the VIX a little bit here, and how as premium sellers we want to always have our money working in plays and have it burning. If it's not being used to secure a contract, it's wasted money. And I want to say, like, no, it's okay to sit in cash for a little bit. Uh, what we do is we take on risk and we get paid a premium for taking on that risk. And we get paid more if the risk is higher or if the implied risk is higher. VIX is a measure of implied volatility. And you can tell, like, it's been high for a long time. And now it's getting down back to pre-pandemic levels. And the premium is just not as high as it has been in the past. I'm finding plays I would normally put on. The premium I'm receiving for taking on that risk just don't justify putting on that trade. I'm having a harder time finding positions that I feel comfortable selling for the reward or for the premium that's coming in. And I'm just kind of just want to say, like, don't feel like you have to have your money in a play at 100% of the time. Wait for those opportunities where you're getting paid a decent premium for those positions. Don't go forcing plays. For me, I started trading options back in this level. So, like, the reward versus risk was pretty high. And now that we're getting down here, this is where I'm finding I have trouble finding stuff to get into without trying to force it. I don't want to be forcing positions. So you might be seeing me move back to more Dave safe level positions, plugging a little bit of premium along the way, but I'll be getting safer for taking on that smaller premium for sure. Just something to think about. Don't feel pressure to put on trades if it's not to your benefit. So tomorrow's video is going to be about bull put spreads. It's basically the opposite of what I did on Tesla this week. And it's a good strategy for smaller accounts to be able to play on higher priced equities. And I hope you guys watch it because I think it's a nice strategy that everyone should know about. I hope everyone had a good week as well. Go ahead and leave a comment. Let me know how you did. And until next week. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.